All right, everyone. So I'm going to go over basically like a case study of springs, buying springs, and I'll do it on the Dow. All right. So this is like an example, not really a case study, but more like an example. And the case study would get into all the nuances. And basically, what I'm going to do is show how it's done, like how to trade any market. So this is the Dow, and the entry is going to be on an hourly. That'll be a lower time frame, and the higher time frame will be the daily. But you could use this on hourly and 5 minute. I've even used it, believe it or not, on 5 minute and 30 second for scalping purposes. So it. But right now, I'm just going to show, for larger moves, so you're not just in and out of the market all the time, and are able to capitalize on a bigger move, and hopefully get in on the hourly or a little bit lower, and ride a daily trend for a bigger move. So on the right hand side, I have basically some markets that I'm going to follow. I might just add a couple of more. I don't want to, we'll see. Because the thing is, a lot of it's automatically done for me, so I can add more markets. The idea is just to see trends and look for springs, and then see if there's buying on the spring. That's it, right? And the trend, it's really a composite of two time frames, because you always want trend on two time frames. So here it's daily and weekly, and then a spring looking at it on the hourly, and the change of behavior or buying, that can be, yeah, that's the same, hourly. So anyway, so let's just get into the details of what's going on here. So the idea is really simple. First of all, you have to understand what a spring is, and I went over the study already. It showed from David's book. So if you just go look at that, you'll see, give a breakdown of it and really honed in on the sections that matter. The idea is really simple, though. You have a low, and then you have a lower low, but that lower low is rejected, meaning it has no follow through and it has a hard reversal back up within the range. So you have like a trading range, and you have a low within that range, and it gets penetrated, but you have strong buying because the lower low is being rejected. So there's a low, an attempted lower low, but it gets rejected, and price comes back within the range above the prior low. And it does that with authority, meaning with good price spread. All right. So there's minor examples of that, and there are more major examples of that. That's the first thing you have to understand what a spring is. It's a way of buying support, and upthrust is a way of selling resistance. It's really just a way of buying support and selling resistance. It's just support and resistance trading. So I wanted to throw that in there because folks think like, spring is something special, but it's really just a support resistance trading strategy. That's all it is. All right. So if you want to buy support, sell resistance, springs and upthrusts are for you. They're just a very good way to buy support resistance, and you can use them also on a minor basis, meaning like right here, you have the price pullback. It goes through upthrust and then a spring, and then boom. So why does it upthrust? It upthrusts because typically upthrust in an uptrend set up the springs in that uptrend to go higher. Why is this the case? I have no idea. I think it's some type of overhead, like look overhead. They look first and then decide to pull back and then go. It's like a probe. It happens all the time. So see over here, just tap and then it comes down and flies. It happens all the time. It's like, I don't know. It's just, that's what happens. All right. So upthrust and uptrends basically set up the springs. And I've seen this all the time happening, too many times to see this behavior again and again. The idea is not to sell the upthrust. The idea is to let it forecast the spring that's about to come. upthrust is forecasting the spring that's about to come, and then get ready on the spring and then ride the move. So we'll take a look at this spring and how to buy the spring. The easy way to buy a spring, and a very straightforward way, is if you have a low, you mark the low, you mark the high, right? Like a trading range. And then when it tries to attempt to make the low a low, you want to see how strong the rejection is to go lower. And by strong, I mean the strength of the spread of the bar from high to low. So for example, look at the spread of this bar. It's significant. In fact, I measure it, and it is notable because it's the biggest thrust, meaning the biggest distance from high to low, in 4 bars. In a 1, 2, 3, 4, 5, in a 5-bar consolidation, this is bigger than the entire all the consolidation bars. It's the biggest one. So that's the easy way to buy a spring. Okay, so let me just repeat that, and I'll just show it right now. So watch how I do this. The easiest way to buy a spring. All right, now anytime you have highs and you have lows, I'll just use a wave, right? And tap. So let's say you have this. You have a highs and lows. You want to watch the rejection, meaning specifically the bar coming back into the range, into the trading range, and you want to take this bar and focus on its spread. Its spread or its range. Okay, if it is a spring, it's going to have big spread, big range from high to low coming back into the trading range. It's going to be a big bar. To put it as simply as I can, the bar that comes back into the trading range will be a big bar. Done. All right? So whenever you see a breakout attempt and it's like this, and you see the rejection that's like that, this is an upthrust. And when you see, it goes down below the range and comes back with authority, that is a spring. How do I know this? Because I've examined them, I've examined the lower time frames, and I see what's going on. And this is the common characteristics. And I measured the springs and upthrust, and I can show you that right here. So this is an indicator. It says BT means the biggest thrust in, which is just the biggest range, in how many bars. BUT is the biggest up bar. So, green bar is how big it is. And the biggest down bar is how big it is in the biggest down bar. So this here, as far as sequential bars are concerned, is the biggest bar in 4 bars. You may say that's not a big deal. It is a big deal when all you have is 1, 2, 3, 4, basically 4 bars before it. It's the biggest bar in that little range. So it's the biggest one. So now we'll take a look at another spring right here. That is again the biggest in 4 bars. So within this pullback, within this ABC correction, right? This bar is bigger than 1, 2, 3, 4. So since the pivot high, that's the biggest bar. And coming back within the range. That is meaningful. That is meaningful. It's not a little shitty bar. It's a big bar coming back into the range. And that's how you know it's a spring. Spring, in my opinion, the ones that work, they're always big. Upthrust, the ones that work, always big. Big what? Big range, big spread from high to low. Big bars. This is the characteristics of a spring. So, pay attention to this. If you want to buy springs and upthrusts, I'm showing you the easiest possible way. All you need to be able to do is draw a horizontal line in an uptrend at the lows, and then see those lines penetrated, and then price coming back above that line with a big bar. That's your spring. All right, that is the basic of a spring. Yes, there's more to it, all that other stuff, but this is like, I'm just trying to make it like as simple as possible, and I'll give you examples. And this is not some shit I'm making up. I'm showing you mechanical examples with mathematical measurements, like quantifying it. Biggest in 4 bars is biggest in the consolidation. Here, spring is biggest in 4 bars, which is biggest in the entire wave. So, right? So, this upthrust right here, I don't know how big this was. Okay, so this one was the one that you would know for certain that that's an upthrust, because this was biggest in 4 bars. Here, this is the biggest in 15 bars. Obviously, it's an upthrust. Look, UT means upthrust, goes above and bang, with the biggest in 15 bars, right? If you also note that spring and upthrust is different than spring position and upthrust position. All right, first, you need to see the market go into a spring position or upthrust position, and I'm always looking for that. I want to see it at spring and upthrust positions. Does that mean that it's a spring or upthrust? No, it means now it's time for those buyers or sellers to show their aggression. Are they going to aggressively buy and put it back into the range or not? All right, so that's why you'll see like springs and upthrusts all over the place. But obviously, I'm not just going to trade any spring and upthrust. Those are the positions. I look at what happens on those springs and upthrusts, and then go to a lower time frame and measure it. Because if you can measure it, you can find what I believe are the best trading opportunities, because they are at the danger point. There's no other point that is quote unquote more dangerous for one side than a spring and an upthrust, because that is the extreme of price, because it's at the edge, literally trying to break out or break down. It is at that point, and now we'll see if the buyers or sellers are gonna step in. You see, so these are the best trades, because they are the literally at the danger point. And anyway, all right, so we're going to take a look at this spring. I've showed you one way to do it is just watch it and see the size of the bar, and then measure it compared to the prior bars. Is it the biggest in 5 bars? Is it biggest in 6 bars? Is it biggest in 3 bars? Is it bigger than 4 bars? Is it biggest in the entire consolidation? Is it biggest in the multiple bar wave? How big is it? So relatively to other bars. The other way you can do it is by taking it and comparing it to the ATR, meaning looking at the trading range of the bar, the spread of the bar, and comparing it to the ATR and seeing how much bigger is it. Is it 1.33 times the ATR? Is it 1.5 times the ATR? Is it 1.2 times the ATR? Or is it just like the same as the ATR? If it's the same as the ATR, obviously it's nothing. But if it's like 1.25 or higher, that's meaningful. All right, so these are 2 ways of measuring. Anyway, so over here, okay, did I go here? Okay, so we'll take a look at this spring. So we see the spring on the daily, on the YM, and let's just go to it on an hourly chart, and I'll show you what happened there. All right, this here, that was the upthrust that, we got to explain that upthrust setup springs. So you always have to keep that in mind. When you trade with trend, you're going to see upthrust, you're going to see that selling, but remember, they're setting up the springs. taking it down to a support level, and you're trying to buy those springs, not sell the upthrust in uptrend. They just set up the springs. This is what happens. So now we're going to watch those springs, and we'll measure them and see if it's the damn thing is worthwhile to buy, right? Because here's the thing. At the edges is where the big boys play. Why? The least amount of risk and the best price. What could be better than a spring to buy the low when it's literally going to the low and even giving you a better price than that low? It's the cheapest price relative to the prior low. So here we see that at that low, you have aggressive buying. How do I know it's aggressive buying? Again, I'm measuring the fucking wave. This is the biggest wave in 15 waves. This is the biggest volume in 12 waves. This wave has 5.98 times the average volume of the up waves. Almost 6 times the volume of the up waves. Don't you think that's aggressive buying? Even the bars within that wave, like this bar here, is the biggest up bar in 99 bars. Newsflash. A change of behavior wave has a change of behavior bars. A sign of strength wave will have a sign of strength bar. What are the qualities of those bars? Same as the qualities of the wave. Big price and big volume. By observing this bar in the wave being the biggest in over 99 bars, it is clear sign of aggressive buying. Someone's buying the low. That's why I say buying. And then what happens? It goes up. All right? So we took a look at this spring. Now we'll take a look at the other spring. All right? Now in this strategy, you must, first of all, this is just support and resistance buying and selling. Okay? That's all it is. Second thing is you have to have some wave, because you need waves the way I'm doing it. Or if you don't have waves, you just draw, trading ranges, like the line across the high and the low. And just wait until it taps low, and just draw a line with an alert. So you're not just looking at the the useless bars all day, or you just wait for it to go there. All right, so we're going to take a look at the spring here. All right. So it was in a spring position. As it was in a spring position, again, same characteristics, because you cannot hide aggressive buying or selling, right? What do you have? You have the biggest wave in 8 waves, the biggest volume in 5 waves. That's pretty all right, right? Not that bad. But what seals the deal? What seals the deal is this additional factor, where this bar is the biggest bar in 100 bars. Biggest bar in 100 bars right there, where it says 100. Biggest bar in 100 bars, that's part of this buying wave. This is a change of behavior or a sign of strength, or just, let's use common sense here. This is someone buying those lows. Someone is buying those lows, and that's it. It flies after that. All right. Even the turning point here, like I've explained a lot now, so you should be picking it up, that I don't know if this was it or that was it, but 9. It's not visible here. It's visible. I want to give you clean examples, but I want to see, like, all right, I mean, this one was the biggest in 5. This one was the biggest in 9. Was this an upthrust? Yeah, that was an upthrust. So it went into an upthrust position with the biggest selling in 5 bars, followed by the biggest selling in what is it? In 9 waves. All right, now it's not really that clear because they did come back aggressively to defend and failed. So, right? Anyway, so I just wanted to show you guys, this is for the Wyckoff community. You know, I'm trying to, whoever just paid forward, you know, to the Wyckoff folks, so they know what they know, and they don't have to like spend money and time trying to figure this shit out. All right, so this is how you do it. You have spring against the low, spring against the low, look for buying. Buying wave will have big price and volume on the wave, and within the bars themselves will have big spread. If you measure them, you will many times see very large numbers, the biggest in 100 bars, biggest, sometimes you have volume off the bottom, especially on daily charts. So you'll get these indications that will show you. All right, now this fucker here is at an upthrust position. Right here is upthrust position, but do you see any real aggressive waves? There is some aggressive selling, but it's not really overly aggressive. Like this is only the biggest bar in 7 bars. It's an upthrust position, the biggest bar in 7 bars, but nothing outlandish like the biggest in 100 bars, and nothing outlandish like the biggest wave in like 20 waves or 10 waves or 15 waves like this. So if you might be in upthrust position, that doesn't mean you just sell. It means you have to look for the trading opportunity and see the selling. And how do you see the selling? You lose the same factors, price and volume, and you see if there's big price and big volume in terms of waves, big waves that are big with big volume, and big price and volume on those bars that are part of the wave. And that will expose the selling at resistance. And then after that, you look for a pullback. If it's a low volume pullback, chances are you're going to get lower prices. Okay? Believe me, folks, the way I'm explaining it is no way on the internet, because no one's going to show you this shit. All right? Take care. Have a wonderful day. And if you want to learn more about this, my recommendation is you read the Division 2 of the Wyckoff course. Pay very close attention to it. And then watch David Weiss webinars on YouTube, and then finally go to his book and read the chapters. The chapter on the first one, which is where to find trades. Then read springs. Then read upthrusts. All right. The chapter on upthrusts and springs, and then finally there's a chapter tape reading. I think it's either the first or the second one. I think it's the second one that covers the waves. Read that line by line, and you can put this whole thing together. All right. So take care. Have a wonderful day. Bye.